Welcome to the deep dive. Today we're jumping into the really fascinating, sometimes kind of baffling world of NFTs, non-fungible tokens.
Yeah, baffling is a good word for it sometimes.
Right. You've probably heard the buzz, maybe seen those headlines about digital pictures selling for, well, insane amounts of money. More than houses sometimes.
It's definitely caught people's attention.
Exactly. And our listener today is trying to cut through that hype, to figure out if there's a real business opportunity here. Specifically, can you actually build something sustainable by flipping NFTs?
It's a really common question. So we're looking at a piece called Flipping NFTs, a business model for the brave. It's a short article, but it tries to tackle this.
For the brave. I like that. Sets the tone.
It does. So our mission here is to dig into that article, pull out the key ideas, and see if flipping these tokens is, a viable strategy or just catching lightning in a bottle.
Okay, let's start with the basics then. Because non-fungible token still sounds pretty abstract.
Yeah.
What is an NFT, according to the article?
Right, so the article breaks it down pretty well. Think of an NFT as a unique digital certificate of ownership. It represents one specific digital item, maybe digital art, a piece of music, a video clip, even like virtual land.
Okay, so it's unique. That's the key.
That's the non-fungible part. You can't just swap it for another one like you could with, say, a dollar bill or the Bitcoin. Each NFT is distinct, and this ownership is recorded on a blockchain.
The blockchain, the digital ledger thing.
Exactly. It's shared, it's public, it can't be easily tampered with. Every time that NFT changes hands, it's recorded there. So you can track its history and prove you own the original digital item.
So the article has an analogy for this.
Yeah, it says earning the NFT is like owning the original physical painting, hanging on your wall, versus just having a print or a photo of it. You own the authenticated version.
Got it. Okay. So you're not just right-clicking and saving an image. You've got the verifiable digital original and NFT flipping them. That's just buying low, selling high.
Pretty much. It's the digital version of flipping real estate or maybe collectible sneakers. You buy an NFT hoping the demand for it will increase, pushing the price up, and then you sell it for a profit, often aiming for a quick turnaround.
Okay, so here's the big question for our listener. How do you actually succeed at that? How do you find these digital things that might actually go up in value? Where do you even look?
Well, the article says you need a keen eye for trends and a real understanding of the NFT market itself. It's not just random guessing.
A keen eye. Okay, how do you develop that?
It suggests looking for potential in new projects, things from up-and-coming artists or new communities that are just starting to form. These might be undervalued when they first come out.
Right, getting in on the ground floor. Like
Yeah.
finding an indie band before they get huge.
Exactly that kind of feeling. It's about spotting that potential early before everyone else piled in. That's often where the biggest gains are, though it's also risky, of course.
Makes sense. So spotting trends. The article mentions specific types of NFTs that are trendy.
It gives examples like digital art, assets for games, and virtual real estate as categories that have been popular. But, and this is important, it stresses that these trends shift fast.
So what's hot today might not be tomorrow.
Precisely. So staying updated is absolutely critical. The article points to places like Twitter and Discord servers.
Yeah, lots of NFT talk happens there.
Definitely. And also specialized NFT marketplaces themselves. You need to be plugged into those communities, listening to the conversations, seeing what projects are generating genuine excitement, not just hype.
So it's about the buzz, the community, not just the digital item in isolation.
Very much so. And that ties into another point the article makes. Rarity and exclusivity.
Okay, like limited editions.
Exactly. NFTs that are part of a small collection or have unique traits tend to be more valuable. Think one-of-a-kind digital art or maybe a super rare item in a game. Scarcity, if people actually want the item, drives up the price.
That feels intuitive. Supply and demand.
It is, but what's interesting digitally, as the article implies, is how scarcity is often defined. It's usually set by the creator using something called a smart contract.
Right, the code behind the NFT.
Yeah, that code can dictate how many editions exist, maybe even things like royalty payments back to the artist on future sales. Understanding that underlying structure, the rules of the game for that specific NFT, can be really important for a flipper.
Okay, interesting. So find potential early, follow trends, look for rarity. What else? The article mentioned timing.
Yes, timing is called critical, and this is probably where the brave part of the title really comes in.
Because the market moves so fast.
Incredibly fast. Prices can shoot up or crash down very quickly. So flipping successfully isn't just picking the right NFT, it's also figuring out when to sell. Do you take your profit now or hold on hoping it goes even higher?
That sounds stressful, a real balancing act.
It absolutely is. Hold too long, the trend might die, the price collapses. Sell too early, you miss out on bigger gains. There's no easy answer.
Okay, so it sounds like there's potential, but it's definitely not a guaranteed win.
Yeah.
The article talks about the downsides too, right? The risks.
Oh, absolutely. It gives a very necessary reality check. The number one risk mentioned is volatility. Extreme volatility.
More so than traditional markets.
Far more, typically. The article points out that NFT values can surge or plummet dramatically based on, social media sentiment, hype cycles, news events, things that are hard to predict. What goes up fast can come down even faster.
Yikes. So your investment could, evaporate overnight.
It's possible. Which leads to the second major risk. Scams and outright fraud.
Ah, yeah. I've heard about those.
The article highlights things like fake NFTs pretending to be from popular collections, phishing scams trying to steal your login details or assets, and rug pulls.
Rug pulls.
That's where a project team builds up a lot of hype, sells a load of NFTs, takes the money, and then just disappears, vanishes, leaving everyone with worthless tokens.
Wow. That's rough. So research is key then.
Absolutely essential. The article stresses doing your homework on the creators, the project's roadmap, the community, checking the smart contract if you can. Due diligence is crucial to avoid getting burned.
It sounds like a bit of a minefield, especially for newcomers.
It can be. And another risk the article brings up is liquidity, or rather, the lack of it.
Meaning it's hard to sell sometimes.
Exactly. Unlike stocks, where there's usually always a buyer at some price, with NFTs, you might not find anyone willing to buy your specific token when you want to sell or at the price you want. Demand can just dry up for certain collections or items.
So you could be stuck holding something valuable theoretically, but you can't actually turn it back into cash easily.
Precisely. You might have to lower your price significantly or just wait, hoping a buyer eventually appears.
Okay. Any other big risks?
The last one mentioned is market saturation. As more and more people create and sell NFTs, there's a danger the market just gets flooded.
Too much supply.
Yeah, potentially making it harder for any single NFT to stand out or hold its value. The article suggests diversification, not putting all your funds into one NFT or one type of project, as a way to maybe mitigate this a bit.
Right. Don't put all your digital eggs in one basket. Okay, so high volatility, scams, liquidity issues, saturation. It's a challenging space, but if someone is still interested after hearing all that, what does the article suggest as practical first steps?
The number one thing before anything else is education.
Learning the ropes?
Exactly. The article really emphasizes that this isn't simple. You need to take the time to learn about blockchain basics, how NFT marketplaces work. It mentions OpenSea, Rarible, Super Rare as examples and research specific projects deeply. Don't just ape in because you saw a tweet.
Right. You need to understand the playground before you start playing the game.
Well put. You need to understand the tech, the market dynamics, the jargon. It's a whole ecosystem.
And what about choosing what to potentially buy?
The article suggests researching the artists or creators behind the NFTs. Just like in the traditional art world, creators with a strong reputation, a growing following, or a proven track record. Their work often tends to appreciate more.
So follow them, see what they're doing.
Yeah, follow them on social media, join their Discord communities if they have them, see how they engage, what their future plans are. It gives you context beyond just the image itself.
Okay, that makes sense. Then on the practical money side.
Set a budget. Crucial. The article is very clear. Only invest money you can genuinely afford to lose.
The golden rule of risky investments.
Absolutely. And stick to that budget. Don't get caught up in hype or FOMO, that fear of missing out, and spend more than you intended. It's easy to do in a fast-moving market.
I can imagine. Easy to get swept up.
Very. And linked to that, the advice is to start small.
Don't bet the farm on your first flip.
Exactly. Buy some less expensive NFTs first. Get a feel for the process, how the marketplace works, understand the transaction costs, the gas fees you have to pay on the blockchain.
Ah, yes, gas fees. Another thing to learn about.
Right. Learn the mechanics with smaller amounts at stake before you even think about committing larger sums. It minimizes risk while you're learning.
That sounds like very sensible advice for any new venture, really. Dip a toe in first.
Definitely. And the article wraps up by basically reiterating the main points. It says, look, flipping NFTs can be exciting, it can be profitable, but it is absolutely a high-risk game.
No guarantees.
None at all. Success, it says, depends on a mix of good research, market knowledge, timing, and, honestly, a dose of luck.
Luck plays a part too.
It seems unavoidable in such a speculative market. So, caution, research, keeping an eye on trends, that's the mantra. And it ends with that question back to the reader, or listener in our case,
Are you ready to dive in?
and see where the NFT market can take you.
Yeah?
Leaves it open.
Okay, so let's quickly recap what we've pulled from this deep dive into the article. NFT flipping. Potential for profit? Yes, if you can spot value early, ride trends, understand rarity, and nail the timing.
And it's a big but.
Huge but. Massive risks. The wild price swings, the constant threat of scams, the chance you can't sell when you want to, and the whole market potentially getting overcrowded.
And getting started means education first, researching creators, strict budgeting, and starting small to learn the ropes.
Right. So this piece gives you, the listener, a foundational look. The potential upside, the serious downside of trying to make a business out of flipping NFTs.
It's a decent primer on the core concepts and risks involved.
Oh, okay, so here's a final thought to leave you with, building on the article's ending. Given everything we've discussed, the high-risk, high-reward nature, this constantly changing digital landscape, what fundamental shifts do you think need to happen for NFT flipping to become maybe a more stable, mainstream business practice long-term? Think about that mix of tech evolution, community power, and raw financial speculation. Where does the balance need to land? Something to ponder. Thanks for joining us for this deep dive.